How's it going, everyone? This video is going to be over top-down analysis and why you need multiple time frame analysis in your trading. We're first going to go over a PDF example and explain what I mean before going over various TradingView examples to get the concept down. So let's hop into the PDF. So here we are in the PDF, and you can see that we have a bullish order block here with price taking out the low and then closing through the series, or in this case, a single candle. So if we're bullish, we can anticipate this low to hold as we trade higher here. So you can see if I want to take a position on the retest, my stop on the low, what happens? It just runs right through my stop loss. And I see many people doing this and wondering why it happens. Well, you just lack to consider the higher time frame analysis. So you can see on the higher time frame, we've just swept out this previous high, had a bearish engulfing candle closing below the low. So I can anticipate this next candle to continue lower. Inside this next candle, it doesn't make sense to be looking bullish when I'm anticipating price to continue bearish. So with the understanding of the higher time frame analysis, if I wasn't to trade it like a pattern and instead only look for bearish setups in this bearish expansion candle, what would that look like? You can see instead of looking at this bullish order block, I'd look at this bearish order block because we have swept out this high using these series of candles that made that high. Once we close below it, I can then look for a position short. This is aligning my lower time frames with my higher time frames, and that is when expansion occurs. So how do I actually trade with the higher time frame? The first thing I want to do is have a higher time frame bias. So you can see here we have formed a swing point. We have closed below previous day low, so I can anticipate price to expand lower on the higher time frame, or my daily bias. Then on an intermediate time frame, I'm going to use this for structure. So I'll look for a change in the state of delivery to form this wick, but then I'll also use it as a structure to look for points of interest to trade off of on my lower time frame. And then on my lower time frame, I'll use that point of interest, look for opposing candles or order blocks, and then that is how I look to get on side with the expansion. So let's hop into TradingView to go over some examples. So here we are with our first example, and we'll be going from the daily to the hourly to the 5-minute. So the daily is where I will derive my bias, my hourly will be my structure or my supporting time frame, and then my 5-minute for my entry. So taking a look at the daily here, we can notice we have a swing low down here, but it has been swept. So this is creating high resistance liquidity. Now, a lot of times if I have high resistance liquidity as a low, I will look to use 0.5 of the wick as an area for it to support. And if you don't know what I'm talking about here, go ahead and check out my wicks video. But as we reach into 0.5 of that wick, we also sweep and then close back inside the range. So if you take a look at my daily bias video, you'll know that I am anticipating price to trade higher. What do we have right above here? We have a nice gap, or the new week opening gap. So looking for price to trade higher from here, I have my bias. Now I can go down to the hourly time frame. So down here on the hourly time frame, we will be using my indicator to visualize the daily chart. But you can see we have the sweep and closure back in. With this, I'd want to see 0.5 of this wick be respected to trade higher. But with my structured time frame, I'm going to be waiting for a change in the state of delivery here, because that is what to me confirms this wick has formed here. So letting this play through. So you can see here, we have went and closed through the series of down close candles that made this low. So now I can anticipate this change in the state of delivery, and price is bullish to these highs. So with that, I'm going to look for a point of interest or some structure. Now in this price leg up, I don't anticipate this low to get taken out because it has formed a new order block or opposing candles. So with that, there is no fair value gap or any point of interest in here. So I'll just take a look at a sweep of this previous low right here, and then I can use that to drop down to my 5-minute time frame. So let's drop down to the 5-minute time frame to see what the entry looks like. Now down here on the 5-minute time frame, I'm once again going to want to see if I get that change in the state of delivery, because then I can anticipate this low to hold and to trade the next candle higher towards my objective. So taking a look right here, let's see if we get that closure. We do get that closure there, and so then this is a possible entry with my stop on the low, because I can anticipate this low to hold as we trade towards the high, because I'm aligning my daily bias with my hourly structure, my hourly point of interest, and then my 5-minute I'm looking for an entry. So I could either look to take an entry right here on either a retest or the close at the market price, look for 2R, and that is the first possible entry. Now I prefer continuation entries, so what does that look like? Let's see if we form a new order block. So here you can see we retch back into a point of interest, which would be a sweep of a low. And then now if we close over the down close candles that form that low, that would be a valid order block, or in this case, a propulsion block. So let's see. So right here, we do get that closure over. So then I would look to enter at the market price, my stop on this new low because it is now protected. And then I can look for 2R. So let's see how this works. There we go. And we get a move to this short-term high, as well as that objective from the daily chart, or the new week opening gap. So heading back out to the hourly chart, just to review what happened, you can see we got a bias from the daily chart, which is saying that, hey, we have formed a low that I anticipate to hold, and I want to see it trade to this high. So I have a directional bias. From there, I'm using the hourly chart to get structure or find lows that I expect to hold, and then I can look for points of interest or sweeps to get on side with a lower time frame to manage my risk to reach out those daily or hourly objectives. So you can see now on the daily chart, we have formed this swing low. We have traded higher through that previous day's high and into the new week opening gap. So let's hop into another example. In this next example, we're going to take a look at silver, and let's analyze the weekly, 4-hour, and 15-minute time frames. So you can see here on the weekly, we've taken out a previous high to the left. We have closed back into the range, and then we've had a continuation lower. And what do we get on this candle closure? A change in the state of delivery, right? Because we are closing through the up close candles. In this case, it is one that made the high, right? So now I can anticipate this to continue lower. What do we have right here? We have some failure swings on the lows, right? So looking for price to trade to this fair value gap here with this current weekly candle. So now that I have a directional bias, I'll go ahead and drop down to the 4-hour time frame to look at the structure and see inside these higher time frame candles. So here we are on the 4-hour time frame, and if I'm anticipating price to have a bearish week, what I'm focused on is letting the wick form in the higher time frame candle. Because if we're going to have an expansion candle, it will have small wicks and a larger body. So once that wick forms, I can then look to trade the body, or after the high forms, open high, look to trade from the high to the low, and then close. So similarly, in this last week, when we trade higher and form the higher time frame wick, then I can look to trade the expansion lower. So with that logic, that is what I'm going to try to do here in the 4-hour time frame. So as we look and zoom into the 4-hour time frame here, I'd want to see price open, reach higher into a point of interest before having a setup. So if we take a look, what do we have here? We have price reaching higher, sweeping out a high, as well as reaching into an opposing candle right here. So 2 points of interest overlapping there. We have a closure back inside the range. So you can see, if you reference my daily bias video, we have closed back inside the previous bar. So I could anticipate price to trade lower here. Now you can see we also have these equal lows down here, as well as a previous low, which is marked out by my indicator. So all these lows right here, which would be my target. So I'm gonna go ahead and mark those out there. So now that we have our directional bias, I'm anticipating that this is the wick of the higher time frame candle. I want to drop down to another lower time frame for entry, which would be the 15-minute time frame. So down here on the 15-minute time frame, I'd want to see when we get that change in the state of delivery, or the closure through the series of up close candles into that important level, into that high. So as we let this continue, let's see what happens. We get a new candle, and we get that closure there. So the same thing here, has this wick formed on the higher time frame. Well, we have retraced higher into the point of interest, right, into this fair value gap, and then we closed through these series of up close candles here. So now we have the change in state of delivery and an order block. So with this, I could look to get on side. So I can either wait for a retest or just enter on the close, which is my preference. Then I want to put my stop on that high that I anticipate to hold. So taking a look and zooming back out, where is that target we marked out? it is right there, which also lines up with the standard deviations for my indicator. And this is a 3R trade. So let's see what happens here. So we get a continuation lower right through our target. So when does expansion occur? It is when you align all the time frames together. So you can see here, this is when the 15-minute was bearish, and it's also paired with the 4-hour being bearish, and also with the weekly being bearish. So zooming back out to the 4-hour, you can see that we were looking to trade in the wick of the higher time frame bearish candle. We let that wick start to form, or where we'd anticipate it to form, and then we aligned a bearish 4-hour setup within the weekly time frame, and then also aligned that with the 15-minute setup inside of that. I think this is one of the most important concepts in trading, because if you lack a higher time frame analysis, you're going to be looking in the wrong direction and get caught offsides a lot. So let's get into another example. So here we are with our next example, and this is going to be on USD JPY, so some Forex examples. So if we take a look at this trend, you can see this day right here, we have traded back into this fair value gap, or sweeping out this previous day low, forming a protected low. So if this trend is going to continue, I'd anticipate this low to hold. And do we have a point of interest in this range? We do, as we have a fair value gap. Within that fair value gap, price has retched into it, closed back inside the range or inside the previous bar. So I can anticipate price to trade higher the following day. So with this as our bias on the daily chart, I'll drop down to the hourly chart for structure. So here we are on the hourly chart, and you can see my indicator has already plotted the change in the stated delivery, but I'd look for a change in the stated delivery here to confirm that this wick that I'm anticipating to hold is going to hold to trade higher to the highs, right? And you can see marking out the previous day high, which the indicator already does, that is where I would have a target. Now, looking into the next day, I'd want to see price open, low, high, close, right? So I'm just going to look for price to trade lower first, form an order block, and then go higher from there. So you can see a very shallow run, which is preferred. We sweep out this low in this consolidation, and then we close over, or not quite yet, but I'm looking for a closure over the down close candles that formed that leg. We have yet to close over it, and there we get the closure over. So if I was just wanting to execute on the hourly time frame, which I can do, I don't need 3 time frames, I cannot go lower. If I can manage my risk, I can go ahead and just take an entry there and looking to that high that is 4R, or I could look to take off at 2R over at these highs here. Now I could do that, or I could look to go to a lower time frame entry. Either works, it is just personal preference. So as this trades higher, what do we see? We get a nice displacement. Now we have a fair value gap, and once again with the closure, we have price reaching lower, closing back inside the range. So this is where I could drop to a lower time frame to look for a setup. So let's go down to our 5-minute time frame. And here you can see in London, that is where we get our first setup here. I could anticipate this low to hold if it wants to trade to the high. And there we go, and we get a trade higher there, right? Now let's say I missed this trade. Let's go back out to the hour. Is it already too late? Well, since I'm looking for price to trade to this highs, it is not. We have just formed an opposing candle here. So I'd anticipate this to hold price up if it's trending to these highs. So I'd once again just want to wait for a new hourly setup, which we get here. So you can see we retrace back into the order block. We have our sweep and closure. And so then I can go back to the 5-minute time frame here to look for a setup. Now the same thing applies. I'm just going to be looking for a change in the stated delivery here off this sweep. And you can see we get that, and that is what the indicator plots out. I'll go ahead and clean up these drawings. So if I'm going to look to be trading this, I can wait for a new low to form or look to let this wick form. And that is not looking super great for the setup. I would not try to take a setup here because we're so close to these lows. I would anticipate the lows to get taken out, or if they're not going to, it would need to close over this, and then I could look to trade the following candle because this is likely to be a reversal candle. So here we get that closure. I could look to take an entry here. I want my stop at least on the bodies, right? Or the low, and then I could look for 2R, which can be there. Or what I like to do is go back out to my higher time frame and find where my targets are there. All right, so if we're taking a look at this, I have my targets up here. That is where I could hold my runners to. Now going back to the 5-minute time frame, let's see how this works out. There we get the candle for continuation, which would be another entry. And there we go and take out the highs. So once again, all I'm trying to do here is go from my daily, my hourly, and my 5-minute, or my bias, structure, and entry time frame, and align those all together. Once those are all aligned together, that is when expansion occurs. So you can see here, this is when they got all aligned together after the closure through these down close candles, and we get an expansion. And then once again here, once we close through these down close candles, that is when we get the expansion as well. So it's all about aligning all your timeframes together. And if you don't know what I mean there, please check out my timeframe alignment video. So let's get into one more example. So here we are with our last example, and you can see we are on gold, and this is forming bullish structure, right? We have had higher highs, higher lows, and we get an expansion higher. When we get expansion into a fair value gap here, continuous expansion, I'm looking for a new phase of price delivery, which will either be a consolidation, a retracement, or a reversal. And I use the daily candles to tell me what is happening. So I'll need more information, so I let a daily candle pass. Currently with this, it is looking like either a retracement or a reversal, right? It's not consolidating. It is forming a nice bearish closure. So I'm anticipating this next day to go lower. And if we close lower, it's going to be a reversal to trade to these lows. If we close back inside the range, I'm viewing it as a retracement to trade higher. So we let the next candle close. And with that closure, I'm anticipating this to be a retracement, right? So with that, where am I looking to trade it? To these highs. So with my daily bias, I have a directional bias looking higher. I can drop to the hourly time frame for my structure. And for the ease of things, I'm going to use my indicator once again, but you can see we have marked out that sweep. We have our change in the state of delivery, so I'm anticipating this wick to hold. And then I'd want to see an open, low, high close. Now in this leg, where would I anticipate price not to trade to? Well, I've formed a new propulsion block here. So I wouldn't anticipate price to go below there, and I don't want to see a close below the mean threshold of it. So within this range, do I have anything? There's not much here. So I can use this opposing candle or just wait for a low to form. So right here, we're trading lower, and I just want to see when I can anticipate this wick to have formed. And you can see right here, we retest that opposing candle. We're back into the discount of this range. We get a nice strong closure here. Once again, if I just wanted to take an entry here, I could go ahead and enter this and put my stop on the low and target 2R or my standard deviation projections or the highs up here. Or I can drop down to the lower time frame. We'll go ahead and drop down to the lower time frame just to show what I mean with aligning the time frames and the top-down analysis, but I find that this works very well. So let's go down to the 5-minute time frame. We are in our hourly setup, and now we are in our 5-minute setup. And once again, what am I looking for? I'm looking for the closure through these down close candles here into the point of interest. And so we let this play out. What do we have? Well, we have that. So now I can anticipate this low to hold, but I can also refine that down because I have a new order block here as it retch into a fair value gap. So right there. So I could go ahead and look to take an entry here, put my stop on the low, and you can see I have right about to 2R on these highs to the left. Or if I want to hold to my higher time frame targets, I would go back out to the hourly. And out here on the hourly, where would my targets be? Either my standard deviations or those previous highs, right? And that's where you can get some pretty insane risk to reward with some runners. But for the sake of things, we'll look to the highs right here for 2R, and then we can see how the runners worked out. So let's go back to the 5-minute time frame. And here we are back on the 5-minute time frame. Let's see what happens. So speeding through this takes a minute, but it goes and runs through the TP or that short-term high. Now if we go back to the hourly, see what I mean with taking targets from higher time frame objectives and using the lower time frames to enter into it to increase your risk to reward. I can look for my projections from the hourly or looking to trade to these highs, right? So as we let this continue to play out, let's see what happens. Get that expansion there to our standard deviation projections. Then we go and take all these highs up here. So that is how you use top-down analysis. I hope you found this video helpful. If you did, please consider liking and subscribing, and if you have any video requests, please leave them in the comments section below. I hope you have a great rest of your day, and I'll see you guys next time. Have a good one.